Now, investing in South Africa requires a strategic approach that balances risk, diversification, and a long-term planning. This is something that if you want to invest into South Africa, you must always have these three in mind. There must be some sort of risk, there must be some sort of diversification, there must be also a long-term planning. When you invest, you don't invest for short term, but you invest for the long term, right? And there are so many assets in South Africa that have generated people in South Africa millions and millions of rands. And today I want to give you some of the investments that can be the ones to take you to your next financial freedom. I mean, one of the things that I talk about on this channel is, of course, investing in the stock market, right? It can be buying individual shares, it can be buying, of course, the ETFs, which this is a better way to invest. As you are starting your investing journey, ETFs are the best options for you because they give you a diversification, which is one of the three things that I said it's important, right? But of course, before we dig deep, obviously, onto this video, please consider liking this video if you enjoy the content. If you have not subscribed, consider also subscribing because YouTube has been telling me that some of you guys are just watching and not subscribing. So I hope this content is valuable to you or to everyone that's watching, and if it does add something or you learn something, please, I will appreciate if you can just like this video because it takes me some time to compile and make videos like this. So back to the video. Like I said, when you are investing in the stock market, those of you that still don't know what a stock market is a marketplace where company publicly listed in the stock exchange publicly trade, right? So it's anyone can buy those shares, right? And the good thing is that not only here in South Africa do we have an opportunity to buy the publicly listed companies and ETFs, but you can also buy companies abroad in the US, in Europe, and the others together with their ETFs, which is something that offers a massive opportunities that can be able to grow your money significantly. So there are a wide range of options, but like I said, as a beginner, you don't really want to focus on which company to buy, but rather you want to buy ETFs because with ETFs, what you are buying, instead of buying one company that could result in you maybe losing your money if things don't go well onto that company, an ETF offers you a diversification where you are buying multiple companies in multiple industry. Let's take the S&P 500 for instance, which is a US or the most popular indices in the US. It tracks the top 500 companies in the US. So it means that the movement of that index, it does not depend on one stock. It depends on the majority of the stocks in that index, and therefore it's not that volatile, and you will steadily see your money growing, right? I mean, the S&P 500, that ETF, that index, annually it grows with an average. It has been growing on an average of around 13%, and 13% compound interest. You have a long-term vision, you and me can agree that in 10 years that 13%, whatever money you put consistently, it will grow so much, it will grow so your money at a very good rate, which is something that is obviously good. So ETFs gives you that. Locally, we've got like the JSE Top 40, which tracks the top 40 companies in South Africa. Your Vodacom, your Shoprite, and the others, they are in this basket. And when you buy that ETF, you are buying a basket of shares. And again, when one company in that top 40 drops, it doesn't mean that the index will drop, or that ETF that you own that tracks these top 40 companies in South Africa will drop, but it might just consolidate and until such point that majority in that ETF or that index are dropping, then it will also drop, right? That is the benefit of owning an ETF over and above, of course, an ETF to try to maybe minimize your risks at the beginning of the stock price. But I must say, I said you must take calculated risk, right? In as much as you need to start there to buy indices, to buy index, to buy ETFs, you and me can agree that you need to graduate from that, because I can tell you now there are local companies like Capitec that have generated people tons and tons of money because they invested it in its early days. So what I'm trying to say is that you need to continue improving in your investing knowledge so that you move from ETFs to also um, individual stocks. So as you're investing in ETFs, you also have individual stocks, because with individual stock, the growth is more, but the risk is also more, because unlike the ETFs that you are buying an index, or you are buying an ETF that tracks multiple companies, with individual stocks, you are buying just that one stock. So going into a grocery store, which is like your exchange, and picking which company to buy, it's not that easy or simple, which is why the easiest way to start investing your money in the stock market is to obviously go through and buy the ETFs, your top 40, your S&P 500. The good thing is that there are service providers that are offering this: Signia, Satrix, One Invest, and the others, right? Locally here, that you can buy their ETFs, and they track these companies that I've been talking or telling you about, the big indices. That's where you need to start. Investing is very, very important to start early, because the earlier you start, the more you get ready, or you will be fine, sorted when it comes that time where you want to retire. But if you don't start early, if you don't start now, then you face a risk of your pension money, or the whatever money you are putting aside, not being enough. There must be more that you do if you want to get to financial freedom. There must be more over and above the retirement annuities you might be investing in your company, or you might be contributing towards in your company. There is still something that you need to do for yourself. And look, saving and investing is not the same. When you talk about investing, we are talking about long term. When you talk about saving, it's for a short term, because you cannot really say you want to go to financial freedom by saving money, because saving don't really give you that much of money. Saving, primary purpose for saving is just for emergencies. That time when you need to access funds and you don't have money accessible, you can always tap on your savings. But investing, you must have a long term in mind. Long term is anything from 5 years going up, but I think 10 years, 20 years, 30 years, it's also obviously something that is highly recommended, because look, investing with a long-term perspective, it's something that is the end game. I remember, or I'm being remembered by a transaction that Elon Musk made last year of using his Tesla shares as collateral to buy what was so called Twitter, and now it's called X. He never sold his assets. He had so much assets, and he does not sell his shares of Tesla, which tells you that this is the same mindset that billionaires have. So that when you are investing into something, you need to invest for the long term. Don't expect to see results now. Don't expect to see instant gratification. Don't be the person that chases instant gratification, because we all know what that leads into. Yes, you must do, or you must, of course, take calculated risk, but don't invest today expecting to get your money growing by 100% in the next 6 months or in the next year. Always have a long-term vision on your investments, and do not sell your investments unless it's extremely critical and maybe you don't have your savings anymore. Do not do that, which is why I was just telling you the story of Elon Musk, to say that he wanted to buy Twitter. I think they sold it to him by what? Over 40, almost $50 billion. But he went to the financial institutions, your banks and whatnot, and said that, hey guys, look, I own 20% of Tesla, and this is the value of my shares. Can you borrow me money? Almost $50 billion to go and buy Twitter. And because of the assets that he had, they gave him that money, and today he owns Twitter and renamed it to what is called X. So investing, it's something that you must know or always have in the back of your mind, to say that you are doing it for the long term, unlike savings. You can also invest into commodities. You can also invest into property. You can also invest into bonds, government bonds, right? Government bonds, like you are loaning the government, and they promise you to pay you a certain percentage, which that can be another sort of investments that you consider. Property, honestly, I don't know much about property, but investing shares, it's my game, right? But property, you can also look into going in there. And gold, you all know that gold, since last year, it has been on a skyrocket, and those that own either gold stocks, gold companies, gold ETFs, they are sitting at a very good profits, because the more gold prices goes up against the dollar, is the more the gold companies that are mining gold will do extremely well. It is for that reason that even in here in South Africa, your Signia Stillwater, your gold fields, Harmony Gold, their share price have been doing so well because the prices of gold have been going up. So investing in gold does not necessarily mean that you need to go and buy gold or try to get gold in the mine, though it will be a very good thing, but it can come as, or you can use the approach of buying publicly listed gold companies like the ones I just told you: Sibanye Stillwater, Harmony Gold, Goldfield. We don't know where gold will be, but truth be told, the prices of gold will always, forever, be going up, which is something that you should have at the back of your mind. So, yeah, man, it is possible that you can grow your money in South Africa. It is possible that you can get to financial freedom with doing this thing yourself. The most important thing that you also must develop, you must develop discipline. If you say you are going to contribute so much amount of money on a monthly basis buying these assets, you must commit to that. Don't deposit or don't invest this month, you skip 2 months, you invest the next month, because then that will not make you even develop a close heart to this investing that you're doing. The more you do it more often on a monthly basis, or even twice a month, is the more you are going to also take an initiative to go out there to look for opportunities, companies, ETFs that you can invest in. This is something that, of course, I thought I come and give you today. Tell me what you think about this. I will see you on the next one. Like, share, subscribe, hit that notification bell so that at least you get notified by YouTube every time I drop a new content. I'll see you on the next one, my dear friends, and God bless you.